Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at critical metals.
If you find our talks useful, please consider subscribe, like, and comment underneath.
We've got a really fascinating one today.
Mm.
We're looking at a company that honestly feels like it's just sitting right in the eye of a storm.
You are not kidding. I was looking at the charts this morning, and I practically had to rub my eyes.
Yeah.
I mean, when a stock rallies 80% in a single week, you really just have to stop everything and ask, what on earth is going on?
It's hard to miss. And for everyone listening, just to set the stage here, today is Wednesday, February 25th, 2026.
Right.
And the market is just buzzing. We are seeing incredible volatility across the board, but specifically around this theme of critical minerals, geopolitics, and this massive initiative called Project Vault.
And Critical Metals is right in the center of that.
Exactly. They're sitting at this wild intersection of government funding pushes, supply chain anxiety, and some honestly very high-grade geology.
So 80% in a week. That's the headline everyone's staring at.
Yeah.
But our job today is to figure out if this is just hype because, we see plenty of that in the junior mining space, or if there is actually a real fundamental shift happening here.
We definitely need to unpack the why now behind this rally.
Right. And we need to look at their flagship project in Greenland.
Which is an incredible asset.
It is. And we also have to tear apart the financials. Because I saw some numbers in their recent report that, frankly, looked a little terrifying until I dug a bit deeper.
We will definitely clarify those numbers.
And, of course, the technicals and the risks. Because when a rocket ship takes off this fast...
You have to worry about it running out of fuel.
Exactly. So let's get right into it. The Western supply mode. You mentioned Project Vault earlier. It sounds like a secret government operation from a spy movie.
It really does sound dramatic, doesn't it? But the money involved is very, very real. Project Vault is this $12 billion stockpile initiative.
$12 billion.
Yeah, and it's part of the current administration's broader $70 billion funding push just to secure critical minerals.
$12 billion purely for stockpile.
It's for the stockpile. Basically, the government has realized that for years now, the West has been effectively naked when it comes to the supply chain for high-tech defense and energy applications.
Because we've been relying on competitors.
Specifically China, yeah. For the materials, we need to build literally everything from electric vehicles to advanced guidance systems.
And now they're frantically trying to write checks to change that dynamic.
Exactly. So the market is looking at that $12 billion pile of cash and asking a very simple question. Who are they going to buy from?
Right.
Because they can't buy from China anymore. They absolutely need Western-aligned sources.
So that's the massive macro wind in their sails right now. But there are plenty of miners out there. Why is the market picking critical metals specifically? What's their moat?
It really comes down to geography and geology. Their moat is the Tanbreez project in Greenland.
Greenland. Okay. I know it's cold. I know it's massive. Why is it so important for mining?
Well, politically, it's very safe. It's a NATO member, highly aligned with the West. So that checks the geopolitical box immediately.
Makes sense.
But the geology is the real differentiator here. Most rare earth deposits that you hear about are what we call light rare earth elements.
Lights versus heavies. We hear this distinction a lot. Break that down for us.
Sure. Think of light rare earths as the ingredients for your toaster, your refrigerator magnets, maybe some basic consumer electronics. They're valuable, but they are relatively more common.
Okay.
Tanbreez is a heavy rare earth element project. You'll see it abbreviated as HRE.
And the heavies are for the serious stuff.
Yeah, exactly. Elements like dysprosium, terbium, these are the critical ingredients for advanced permanent magnets in EV motors, wind turbines, critical defense systems.
Things driving the future economy.
Precisely. And they're much harder to find in economic concentrations. Tanbreez is actually one of the largest undeveloped resources of these heavies in the world.
And what about the recent news? I saw some drilling results from 2025 that the market was going crazy over.
Going crazy is putting it mildly. The 2025 drilling results showed ultra-high grades. We are talking numbers up to 27%.
27%. Now look, I'm not a geologist, but in copper mining, people throw a massive party for 1%.
Right.
In gold, we count in grams per ton. 27% sounds just massive.
It is exceptionally high grade. And importantly, they're finding this in specific deposits they call Area B and the Fjord deposit.
Okay.
These recent drills have shown resource extensions, which means the deposit might be even bigger or more accessible than they initially thought.
So you have high-grade, heavy rare earths located in a NATO country right at the exact moment the U.S. government is walking around with a $12 billion checkbook looking for exactly this material.
That is the thesis. Unlike some of their peers like MP Materials, which is a great company, by the way, Tanbreez offers that specific scale in the heavies combined with that Western alignment.
So security of supply.
Exactly. They are positioning themselves as the non-China source for the most critical of the critical minerals.
Well, that definitely explains the 80% rally. The story is incredibly compelling. But as we know, stories don't pay the bills. Operations do.
Very true.
Let's move to their financial health, because usually with these pre-production miners, the balance sheet is just a disaster zone. What are we actually seeing with critical metals?
Let's start with the top line. The growth trajectory is undeniable. For fiscal 2025, they reported revenue of $560,623.
Okay, hold on. 560,000.
Yeah,
For a company with a market cap nearing $1 billion, that sounds tiny.
it is tiny in absolute terms. But you have to look at the context. That figure is a massive 376.5% increase year over year from 2024.
So they went from basically zero to something tangible.
Exactly. It shows they're starting to generate real activity. But, and here is the reality check for your portfolio, they were still a pre-production company.
Right, they're not fully operational yet.
They're burning cash to develop the asset. Their net losses for 2025 were nearly $52 million, negative $51.87 million to be exact.
52 million in the hole. That does sound scary on the surface.
It does, but again, look at the trend. That is actually a 62.8% improvement compared to the prior year.
Oh, wow.
Yeah, they are narrowing their losses significantly while simultaneously ramping up activity. That is a very hard balance to strike in mining.
I did notice one number in the report that genuinely made me choke on my coffee this morning.
The margins.
The operating margins were listed as negative 13,000%. Please explain that so everyone doesn't just panic sell immediately.
Negative 13,000, 28.9%.
How is that even mathematically possible?
It's just a function of the math for early-stage companies. When your denominator, your revenue is very small, just starting out, and your numerator, the expense is high because you're drilling holes in the Arctic ice and paying specialized engineers, the percentage looks ridiculous.
So it's just pre-production exploration costs.
Precisely. If you were building a massive factory, you'd have huge costs and zero revenue until that first product rolled off the line. Your margin would technically be negative infinity.
So investors shouldn't panic about that specific number?
No, it's completely expected for where they are in their life cycle.
Okay, so they're burning cash to find the value. But this leads to the biggest risk for junior miners, which is liquidity.
Yep, the burn rate.
Do they have enough cash to keep the lights on without diluting the current shareholders? Because usually this is where a company prints millions of new shares to pay the bills and the stock price just crashes.
And this is where it gets really interesting. This is a key wealth insight for anyone listening. Their liquidity situation is surprisingly robust. And it's not because they are diluting shareholders.
How are they funding it then?
They secured $120 million in funding from the U.S. Exim Bank.
The Export-Import Bank of the United States.
Correct. And the key word here is non-dilutive.
That's huge.
It's massive. This is debt financing or project financing that does not require issuing new shares that would lower the value of your existing holdings.
That is a massive win for shareholders.
It really is. It validates the project the U.S. government is essentially backing them, and it keeps the share count stable. If a private equity firm lent them that money, the terms would likely be incredibly predatory.
But government terms are different.
Usually much more favorable, because the goal isn't just pure profit, it's national security.
And I saw something about warrants as well.
Yes, they raised just under $1 million, about $973,000 from warrant exercises.
Translate that for us really quick.
A warrant gives an investor the right to buy stock at a set price. When insiders or early investors exercise them, they're paying cash directly into the company to get those shares.
Got it.
It shows that the people closest to the company are putting more of their own money in. They're betting on themselves.
So current market cap is sitting around $986 million. They have cash, they have government backing, and losses are narrowing. That is a much better picture than I expected from the headline numbers.
It's a very stable foundation for a pre-production miner.
All right, let's talk about the chart. We mentioned the 80% rally this week, but this stock has been on a wild ride for a year now.
Wild ride is putting it gently. If you look at the 52-week lows, this stock was down near $1.23.
$1.23. And today, February 25th, we're trading near $9.06.
That is a one-year change of plus 239.3%. If you were brave enough to buy at the bottom, you're having a very good year.
But it hasn't been a straight line up, right?
Not at all. There's been massive spikes and drops. In the past, we've seen psychological resistance points as high as $32.15.
$32. So even at $9, we are way off the all-time highs.
Correct. And that creates what we call overhead supply.
People waiting to break even.
Exactly. Investors who bought at 20 or 25 who are just holding on. But it also means there is a lot of room to run if the momentum sustains.
What are the momentum indicators telling us right now? Is the stock overbought after this 80% move?
It's a mixed bag, which is pretty typical for a breakout. The moving averages look bullish. The trend is clearly your friend here.
Right.
However, some short-term signals, like the Mansi D and the Awesome Oscillator, are actually turning negative.
Meaning what exactly?
Meaning the speedometer is in the red zone. We might be due for a cool down, a pullback, or consolidation phase before the next leg up.
Which makes sense.
Yeah, it's very hard for a stock to go up 80% in a week and just keep going without taking a breath.
And what about the volume?
Volume has spiked to over 5.27 million shares recently. That is heavily driven by institutional interest.
The big money.
Right.
Yeah.
They're reading the headlines about Project Vault and getting in. When volume confirms price like that, it usually means the move is real, not just a retail fake-out.
So, short term, maybe a breath. Long term, the trend is up. But markets are forward-looking mechanisms. If I buy the stock today, what am I waiting for in the next 3 months?
We have a very busy calendar. First up, earnings. The next report is expected around March 18th, 2026.
That's just a few weeks away. We know they are losing money, so what are we actually looking for in that call?
We aren't looking for profit yet. We're looking for progress on Tanbreez and continued narrowing of those losses. We want to see that they're managing that burn rate effectively.
And what about customers? You can dig up all the rare earths you want, but you need someone to buy them.
That is the second major catalyst. Off-take deals. Critical Metals has already secured 75% of their off-take deals.
75% is pretty solid.
It is, but the remaining 25% are expected to close in Q1 2026.
We're in Q1 2026 right now. It's late February.
Exactly. That news is imminent. If they announce they have sold 100% of their future production, that is a massive de-risking event.
The stock would likely react instantly to that.
Oh, absolutely.
And operational milestones. When do we actually see rocks coming out of the ground?
Initial production is projected for later in 2026. They're also making strategic moves, like a recent lab acquisition to speed up assays.
Basically testing the rocks faster.
Right. And we might get updates on their HRE pilot plant. Any news there proves they can actually process the material at scale, not just dig it out of the ice.
So Q1 is packed. Earnings, deals closing, production prep, it all sounds fantastic. But you know how this works. I have to play devil's advocate here.
Bring it on.
What could go wrong?
A lot. This is mining, after all. The first big risk is commodity prices.
They fluctuate
Wildly. Recently, we've seen some neutral to bearish sentiment in the sector due to broad commodity sell-offs.
and tariffs.
Yes. There was a Supreme Court ruling on tariffs recently that the broader market is still digesting. If the price of rare earths drops globally, it doesn't matter how high-grade Tanbreez is, their margins get squeezed.
A mine that's profitable at one price becomes a money pit at another. And what about execution risk?
The company is still burning cash with an EPS earnings per share of negative 56 cents.
Right.
If there are production delays, say the weather in Greenland gets worse, or the pilot plant hits a technical snag, that non-dilutive safety net from the XNM Bank could get seriously strained.
Because delays cost money.
Every single day. If they run out of runway, they might have to dilute shareholders, which would obviously hurt the stock price.
And volatility. We talked about the upside, but volatility cuts both ways.
With a beta of 1.41, this stock moves 40% more than the broader market. And we've seen 35% swings on news alone.
So not a stock for your emergency fund.
Definitely not. This is risk capital. If you can't handle a 20% drop in a single day, this isn't for you.
Fair warning, it requires a stomach of steel. So we've looked at the moat, the money, the charts, and the risks. Let's wrap this up with the final verdict. Summarize the thesis for us. Where do you land on critical metals?
If I had to give it a score, I'm sitting at an 8 out of 10 bullish.
8 out of 10. That is confident. Give me the pitch.
Look, you have a world-class asset in Tanbreez with 27% grades. You have 376% revenue growth, showing clear momentum.
Right.
You have massive U.S. government backing via the EXM Bank. And you have the strongest geopolitical tailwinds we've seen in decades with Project Vault. The macro and the micro are aligning perfectly here.
And the analysts seem to agree with you.
They do. There is a strong buy rating out there with a $12 price target. From where we're trading now at around $9, that implies about 27% upside.
And that's just to the target, if they hit production in 2026.
Exactly. This is a multi-year hold into that 2026 production window. It's essentially a play on the West securing its own future.
It really is a fascinating story. You have the ice of Greenland, the boardrooms of Washington, and the high-tech factories of the future all tied together by this one stock.
It raises an important question for every investor. In a world where supply chains are becoming weapons, how much exposure do you have to the materials that actually build the future?
That is something to think about. Thanks for tuning in to Smart Wealth with Joshua. Don't forget to do your own research.
We'll see you tomorrow.